Okay, I think I got it now. Let me go to this. How'd you do today, Labs? Did you trade any or did you just watch?
I didn't take any trades. Kind of missed the whole morning. Then I came in the afternoon. Just watching.
Man, there were some really, really good trades today. So I'm gonna wait till I get a couple more people. Hopefully, we'll get a few more people in. Did you have anything you wanted to look at?
Um, I think one question I have is that I think I was looking at
You were looking
One
up
EMA
at what?
cross up.
point,
Coin?
point base.
Okay, let's go take a look at that. Oh,
What time it was, but
let me go live also.
basically,
Are you what? Oh, here, yeah. You know what? I'll go live in here. That way, you're not delayed. I think YouTube's slightly delayed.
yeah, I don't remember what time it was. I think it, it was like a time where
Okay, let me get coin open real quick, and I'll take a look at it with you. Okay, let's see. Yeah, there's a couple areas that looked really good. Of course, if you could know to avoid all of this, you can't know that, right? There's no way to know that you to avoid. You just have to. If you get in, you'd be getting in on this candle right there, based off of the strategy, right? You get a push down, you push up above, you close. Oh, I'm sorry, you push up off of these, you close, you get in. You don't go back below the 20. If you the the rule set that I have would be to this is kind of hard though, right? Because it just depends on your risk to reward. This would be the candle you would get in right here as it crossed above this. You'd have to trust the strategy. Otherwise, if it goes against you, then it goes against you. The downside to this with an options trade is that's a pretty big risk because not only
yeah,
let's just say this closed here, you really want to wait for a second close for confirmation of it being a fail, and then it would typically continue. Um, but that's quite a range. So um, and that's just part of any trading strategy. On this one, when you have chop, you have to just trust the strategy, try to stick with it, and if you have a loss, you have a loss. But that also, like I said, it just depends on how much risk you want to endure. And if you did, you would just get in here, you'd wait. I would probably add back on this candle when it went back above this one, then it would come back down again. You get another push. I don't know if I would add any more at this point, but once it got up here and failed back down this candle wick, I would not exit even though this was two closes. Just kind of walking through how I would trade it. And the reason for that is because since this, now this would probably almost make me FOMO out with this huge move down, because at that point you'd be pretty good ways down, but no different than over here, right? You were already risking that to begin with. But in this case, you're going back below these. Couple of things that would help, and it just depends on where it was at the at market time. What's the market doing? What's ES doing? What's NASDAQ doing? What are Qs doing right at the time this is happening? What's Bitcoin doing? Is Bitcoin close to a level? Because you want to watch Bitcoin when you're trading coin. In my opinion, you probably want to have it up to see where it is and what it's doing. Um, yeah, yeah, definitely. If you're trading coin, anytime I trade coin, I will pop Bitcoin up on one of my charts. Um, and then you basically, if you were able to withstand this candle and say like, well, if it closes here, I exit, that's my loss, I take my loss and I move on. However, you start to see this right here, then you get that's your confirmation that, okay, this may be continuing. You don't really know because it's already been wonky. This thing could do this all day, right? You just, nobody knows anything. So when they try to tell you, this or that, you have to trade what you see. And I try to be as real as I can because I know that when you are in something, um, hey Eddie, how you doing, man? When you're in a trade like this, it's easier said than done when you're Monday night quarterbacking it, right? Hindsight, you can go back and look at anything. You have to try to think of your emotions when you're in the trade. And when you're in a trade like this, if you're down this far, sometimes a lot of people are going to hop out. Um, the the bad thing is if you were to trust it and wait. Oh, let me finish my statement. I'm sorry, I got off track. But yeah, if you were to trust it, you would have. I mean, you would have killed. But that's just part of it. It's kind of it's a tough. Um, it's tough to do. But what I was saying for me when I trade these like this, my rule is two consistent reds below. And let's just say, just for just this discussion, say this was just a red candle that stopped right here. I would wait till the next candle because even though my rule is two reds, I'm already risking that anyway. Why not see what happens on the next candle? And if it goes up, then you're holding on. And I've done that several times and it's paid off. Um, but if I get a close, and the only reason I would do that is because it closed right at this one. Now, if this closed down here, no, I'm out. I'm out like immediately. I don't hold on. I don't wait. I get out and I move on. Um, but if you were to hold right here and get through this, I would add right back in on this candle right there. Once again, that's just the way I trade. Go up, I would scale out at the yellow, see what happens, possibly get out here with it rejecting the yellow. I'd be probably all out, even though it's not a consecutive red, which I typically do two consecutive reds. But after seeing all of this, I would most likely, I probably would, I may have even got out here, but most definitely would have been out on this candle moving down below this red. As soon as it started to go below that level, I would have been out completely. So probably not the greatest trade. It could be messy, but that's something for you to. This is really good to go over, right? Because this happens when we least expect it, and you have to be able to know how to meander through that as a trader. It's either yeah, because you're going to get in these trades because we don't know that this candle right here, when you got in, the next one wasn't going to go and it just goes straight up, right? So we don't ever know that. And then, so whenever you get in a trade, you have to know your risk. If you're willing to risk because this came this high up below this level or back to the 20, if you're not, then don't take the trade. That's going to make you a very successful trader because just like today, one of our other traders that's in the group, they got into a trade and they didn't hold. They FOMO'd out because it was too far above their risk level, so they went ahead and got out. Um, and it cost them, you know, it was like a $200 trade. It cost them, but um, if they hadn't got in, you know, it got into a too big of a risk. They wouldn't have had a loss. They could just wait for a good setup or a better setup. And so you don't always know what's better, but if your risk is this high above, and you're like, man, just getting back down there is like $150 loss. I don't want to have to risk that. That's a choice. That's a decision you have to make as a trader. You know, so whenever you see that, that's why when I say like I see a an A plus setup, I love it when I've got a candle that closes right there. Because guess what? That's my exit, right? So when I get a close just above the 20 or the 200, you know, right there, or the LRC, I love that because now I know my risk to reward is even better. If it goes against me, I'm losing very little. But to continue with this trade, I kind of just went on with it. You could have. This is a good sign when you see this happen here in a rejection of the 200 and the 200 moving kind of upward. Just things for you to, you know, recognize, right? So you see it came down and just stopped right on the 200, came up, retested the red. Like that right there is just awesome to see for me. Retest the red, closed literally just a hair above your entry would be that candle. You get in, you could scale out, and then you could exit here. You're not too extended, but that again, these are just those kind of decisions as a trader you have to um, you just have to manage it yourself, right? So if you're not willing for a pullback all the way to the 20, then exit up here, and then once you start getting a pullback, I usually exit on the second red close, and then what I'll do is I'll wait and see if it starts to find support on the 20 EMA, and then I wouldn't have re-entered on this one. I re-enter on the second green when it moves above the close of that green, and then just re-enter, and then I would scale out again at look at these LRCs, man. They're just insane. They're literally insane. Um, and then if you're getting this, that's what I do. When I say guys draw a box, I don't mean exactly a rectangle. Some of them are square or rectangular, you know. Um, but draw this, and if it starts to break down below it, get out. If you get your move above, you're off to the races because you usually get this when you have this kind of flag. So things to think about during the trade. And same thing here. You could have traded down here, but also, you know, scale out here, scale out or exit. This is a long LRC. So for me, they mean a lot. Um, this is the top of my new, or no, here's the top of my new LRC version 4. Guys in the chat, I have a version 4 now. So we have 1, 2, 3, 4, 5, 6 levels above, and you can adjust the levels wherever you want them. Right now, we're experimenting, but I'm doing 1, 2, 1, 2, 3, 4, and 6, I believe. I maybe 1, 2, 3, 4, 5, 6. Yeah, I think I'm doing each one step. Um, I'll verify that in a minute. But um, so I don't know if I'm answering your questions, Labs, but if you want to chime in and ask specific, just go right ahead.
Yeah, yeah. So I think the biggest problem I have is the entries.
Hey, Sal.
So,
Okay. So
um, so I guess just to go further, right? Some of these candles, like they're just like huge, right? They just broke directly above and then hit like the next level, the next standard deviation. And I think my biggest problem is when I've been trading this, it's like I can get good scalps, but it's hard for me to uh, like find a good entry where it's like, okay, I can enter here and have the like mindfulness to hold it through like like the first standard deviation all the way to like a yellow or something. Um, and I
okay.
know it's different
right?
but I think the entry is the part that I'm having.
I it's kind of funny because I hear that as well from others, but I also hear that some of the people that have come into the community, they literally came into the community because the entries. It gives them their best entries that they normally get. So to determine the best entry, it's multifaceted, right? So we have to consider levels that you're trading. So let's go back to like AMD. AMD may be a really good example for today. So, I had this level drawn right here, the 159.50, and I went down to almost, yeah, close to 159. I will draw in a rectangle cloud when I have areas that stretch even, deeper. That way, I do that so it keeps me from jumping in too early. Like, just if it gets below it, I want to make sure I get a full clear through that entire level. This did, but it wicked up really quick off the red, which would have kept me from even doing anything until I saw an actual real close below the red. Um, but for instance, one of the things to watch with this, and I'll pull up I did a diagram and I'll show it. That way everybody can see it. I saw what you asked, Eddie. I will get to that in just a second, bud. So, um, the at pre-market, when we're watching our grids, things to watch, especially when you have your levels like this drawn in. They come in. They're very important in regards to like how the stock is maybe moving up to a level that it might reject or it. So what I watch is this moves above, it breaks above the level, and I'm like, okay, then it gets back below, so it it gets rejected, so to speak. Then you see it circle, comes back up, and then bam, all of a sudden now it reclaims it pretty strong one time. So that kind of gives you a heads up, like, wow, I really want to pull back to this level. I missed this because I got an SPX, but man, that is absolutely what you want to. This will prepare you for good entries, okay? So when you see it come down pre-market and then watch the price action, you get these wicks push. You can see the buying pressure coming in. So market opens, boom, it comes down, and you're like, oh man, do I take a breakout or do I wait? Well, on a day like today, again, it trading is so I guess to me there's a lot that goes into it. I don't know if you heard me this morning or if you were in this morning where I was telling everyone, look, I'm not going to do anything. I want to wait today, especially today, for it to shake out because we had such a crazy day yesterday. News, war attacks and stuff. Yeah, 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 yeah. So you don't ever know what's really going to happen. And so I want to get absolute confirmation. And for me, if I miss a move, oh well, I miss a move. And everybody has to get on that page, man. You have to be okay with not getting in a good moving stock. Or if you're like hell bent and you know that there's a just it looks like everything's going the same way and nothing's stopping. If you get in, make sure when you get in, you draw a line and that's your exit. If it doesn't continue, then get out. If you want to chase a runner, don't don't get in on a runner at an LRC level for heaven's sakes, and don't get in a runner at a major level because you're just really setting yourself up to fail. If nothing else, like if you see it moving, if a runner's moving away from a major level, then you're off to the races if you want to catch a runner. And I do runners. I did AMD yesterday. I don't know if you recall, or not AMD, Apple. Yesterday, Apple, it just kept going down. So I was like, okay, I'm hopping in, guys. And if it goes above, I drew myself a line on my chart. I was like, if it goes back above this, I'm out. So I gave myself a risk out level, and it kept going. And so I was able to profit, not a ton, but I was able to scalp a little bit on it. Um, so the um, so back to this, like, so if you're looking for entries, this right here is showing you a lot. So it comes back down, you get this big candle, but you get a wick up off this red. That to me tells me I'm going to wait, I'm going to be patient and see what it does. If this candle came down right here and closed, I'm in all day long. Next scale out is going to be the yellow always, because yellow's just been a beast lately. But you know as well as I do, you've seen plenty of them that just go right through it. So you can scale some out and hold some, right? And be fine with that. At least you're locking in profit. And you know, it may go against you really hard and you may break even, but at least you're not at a loss. So again, you know, getting in here, trading to here, that's actually not a bad move for your option to scale out. And then if you get a bigger move down, you know, just go from level to level. Um, if you want to do it that way, or if you're one of those guys, if you want to have a rule that's you're not going to get out unless it meets a certain ATR, you can put a ATR on your chart, and if it, as long as it's above your like a 1.5 ATR, you're not getting out. And if it comes back down through your 1.5 ATR, then that's your stop out. There's so many ways to manage your exit, but I know you're more concerned about your entry. The entry would be right here. It's absolutely golden. So you get this big hit push here. Pretty strong candle there. Massive candle here. When you get a massive candle, this is just something I've noticed over the years that goes through the 20 and the 200, and especially when they're that close, that is a guaranteed get in that trade. If it goes against you, just get out. Why? Because it's right here. There's your exit. If it comes back down, you just get out. Take your loss, move on. You have to be willing to take that small loss. Otherwise, you're going to have a hard time being successful trading. You have to be willing to take the risk and and reap the benefits. In this one, my entry would have been right there on this candle. So I'm going to show you. You may laugh at my. This is my dialogue. This is AMD today. So I was watching pre-market on one. On two, it got over the 159.50 level, which we already talked about. I'm not going to go through all of these. I would have entered at six as it cleared. This will be in the use think script form, and I can put this in ours too if you want it to just kind of review. Add, okay, yeah, no problem. And then right here, you get this red candle that comes down and closes like right in between the two. But as soon as you get this strong green that comes down and wicks up, I add there. I don't know if you hear me in when I'm trading, I'm like, I'm adding. If this does this, I'm adding. It's just because I have learned to just really be very confident with this strategy. And if I can add in even lower each time, then I'm just going to profit that much more than normal. Now, do I add a lot? No. Let's say right here, this is probably to me like a 10 contract add or a 10 contract entry. Here, I probably would have added like spitting two or four, you know, on this ad, and then I would see where it goes. And especially if it went up and closed above the red, then I'm like, okay, we're off to the races. And once again, you could, even if you're bold enough, you see this other red come down and then it gets bought right back up. That's almost giving you yeah, it's bringing it to you on a silver platter. Like here it is, it's going. Um, and so you kind of have an idea that this is going to go. At 8, I would scale out at the yellow just because we know it's already rejected it several times, right, in pre-market. And that's something important to pay attention to. Like, look what it did right here. So that's why I always scale out at the yellow anyway. And then scale out at the green, which is the new level. Um, and if you want, you know, if you got FOMO'd out on this big red candle, that's fine. Say you exited, but then guess what? You get this off the 20, you re-enter right here again. With that strong of a push up, you can almost be confident it's going to get through the level. Does it always? No. It could hit this level and come down again. But let's just say you scale out on 9. On 10, you scale out at the long LRC, or I would. This is my long LRC cutting through here. Um, then I would have, I would exit all on the second red where when it got above the LRC and then rejected, pushed up, and then I got another red close below that red close, that's when I exit. Um, in the market we're in right now. Also because it doesn't seem like it's super extended, but at the same time, if this came down, 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 look how far down it could go to get to that 20. You're giving back all of that profit. Why give back the profit if this continues? So for me, I don't ever assume that it's going to just stop and it's a pullback. I assume that this could be a continuation reversal. That's my assumption. So that's why I get out on the second red. And then if I get this, I add on 12. It goes back above. I add, even though I'm close to this, I add, look at red off the red. It's kind of, again, silver platter, like letting you know this is going to continue. 13, scale out, 14, exit all. You're done. And I was being corny, but um, yeah, like you could exit all at second red. Oh, that it was further down. So, and then here's the other part of this strategy. You know, I don't like trading into the 200 or the 20. However, when we're this extended, yeah, no problem. You can take puts down to the 200 or you can take calls up to the 200. Um, so I would have got in right here where this consolidated up and down, and then finally had this red break, strong red break here. Could have tried it here as well. Um, this one you would have been faked out. So got to point that out. I didn't share that on here. I should have. This one would have been a big move down. Probably would have got in here, had this candle move up, this candle move up. I would have exited here for a loss on the second green close right there. So that would have been a loss on the day for that trade. But you could have re-entered here, and then you got all of this. This is again where I draw the flags, right? You wait for it to cross. If you're in this here, um, let's see what I have it at 16. Yeah, you hold and see if it breaks up or down, or down out of the flag. If up, then obviously you exit the trade. If down, add if you're spunky. Like legitimately, you can add because once you break a flag like that, you usually get pretty good follow through. This one didn't go that far, and they don't always, but you usually get a really good move out of a flag like this. Um, and then you could scale. I would have exited at the second green, which would have been almost no profit on that. Maybe none, maybe a tiny bit. Um, but then you get it again. You come up to the 20, you reject. I mean, honestly, I wouldn't be trading anymore. I think you know that. But this right here, you could have traded it. You have this red push down. I'm not, and actually a gap down red, which is awesome. I'd get in there. You're literally trading at the green. You could wait. You could take this as like okay, I'm getting in, and if it doesn't get below the green, I'm getting out. Just depends on like how you're wanting to trade. If you want to be a more conservative, not so aggressive, then don't take all of this stuff. Just wait for the ones once they get beyond a level that you're trading. And number one, go look at these every day until you get to the point where you in your own mind you trust them, right? Um, so like this would have been your trade, your most conservative trade, this red candle here pushing down below. You can get in. I'd scale out at the 200 EMA always because you never know if that thing's going to bounce off of it. You do have a pretty steep 20 coming down, so that would kind of give you an indication it's going to continue. Not always, just something to key in on. Came back up, retested the 200, scale out here, um, scale out at the 21 or at the red, exit all at 22. And so that's just kind of a major, an overall recap of how you could have traded that trade. Or it's a lot. There's a lot to
Yeah,
take in there. Go ahead. Yeah.
yeah,
Ask
uh,
questions.
yeah. I do have a point, but I don't think just want to let anyone else like ask any question. I don't want to hog the time, so I know Eddie has a question.
Yeah. I'll answer his real quick for him. So on Wednesday, So this when you have a question regarding option selection dates. Okay, so the way I select options, um, I basically get like if I'm trading SPX, I'm usually 0 DTE. Um, I usually do 0 DTE on SPX, and almost always at the money, especially if I am looking to get into a pretty good little good move, because I'm going to get more for my money on a move in that regard. I have like if I get in some that I'm like, okay, this one may I don't want if I don't want to put too much into a trade, I may get out of the money a little bit. And the way I do that is I'll go over here with my open interest and I'll look for which out of the money is showing the highest amount of volume. And for instance, let's say it's just this strike price of 57.30, and let's just hypothetically say that shows 10,366. That's the one I would select if I was getting one out of the money, because those are the ones that tend to move really well. For a regular stock like AMD, I almost always get in the money, or I'm sorry, at the money. Um, today's or this week's this weekly's. The only time that that varies is, say, for instance, on Friday, if I'm trading this Friday when I'm trading, if this is like in the pennies, like 25 cents or like 11 cents up here at the money on a 0 DTE, I'm going to go to next week's and get it on a higher cost, and that allows me to make a little bit more money, but also it's not as um, risky, so to speak. I don't know if that makes sense, but when you get next week's, you don't have the DTE, you don't have the deterioration to worry about, so you can hold a little bit longer. And it to me, it feels like you when the price goes against you, it doesn't hit you as hard when you're a little bit further out. I don't know if that really answered your question, but I typically trade, and the way I trade, these are the trades I had today. So I think I was like close to 800 today, but that's because I was dumb and I got back in BABA and lost another 200. But so I what I do to show you how I do it, Eddie, is I'll set up calls and puts, and before the day opens, I will I'll right click here, I'll copy the call, I'll paste it there. I'll right click here, copy, paste, and I set up these so I can be prepared. As time goes on, this one, this call, if you miss it or whatever, and then you're waiting for a pullback, it may be at like 15 or $20 a contract. If that's the case, I just go back in, grab the next one at the money, and I'll paste it right over the one that I just put in. So that's how I do it. Basically, at the money, I've just found that that's the easiest way, and it works the best for me. I probably should look a little bit more into out of the money trades, but for now, that's really working for me. Anyone else have a question? Okay, go.
Cool. Uh, yeah, I do have a question. I just wanted to see if anyone else wanted to like hop in and ask. So, uh, one thing I think I noticed here, do you have like the pre-market high, low, stay high, low?
Oh yeah, yeah. I have that on all my charts always, and I have that indicator in my Discord if you want it. It does all of them.
Okay.
It does all of them
Yeah,
for you. So here I'll show you.
I do
Um,
have that.
oh, okay. So yes, I do. I do have that, and I do watch that. So it gets really like crazy, right? Levelly.
Yeah,
um,
that's yeah. I'll see like so. I think the biggest thing I gained from this though was for sure I need to look at pre-market and what's happening there to understand like how it's moved through different levels.
correct.
Uh, that can inform me as to like what levels maybe, like with AMD for instance, you see it kind of moves up at 838 past the red, it moves down through the red
Right.
at 914, so we know if there's some sort of volume or buying or selling pressure, it would just like knife through that level.
Right.
So I think the big problem I have, right, I'll see this 2200 crossover, but then I'll see this that wick candle, right? That it's like right that green wick on the red, and then I'm like, oh well, this might be a major level. Like it might respect this red a lot,
Yeah.
so I'm kind of fearful to get in.
Yeah, I mean, and sometimes you're just gonna have, yeah, not every trade can be as clean as we want. Some of them look like I mean, I've had many that I think I'm like, yeah, this is an A plus setup, and it's just a garbage trade as soon as I get in, and I sit back and go, how did I pick? And then let's just hypothetically, I'm looking at like Google, and Google looks just like this, and I get in, and Google does this after I get in, and AMD looks almost exactly like it, but AMD is the one that flies. Sometimes, that's just the way the cookie crumbles. I don't know that there's any way to possibly um, figure out other than pick the one that's coming off of a major level that you know that it has respected. That's going to give you your most confidence, or at least your most probability of a good move. Can they just hover right around that level? Sure. Look what happened at the end of the day. Look at this. Just stayed right in between the yellow and the red all the rest of the day.
Yeah, I think yeah, the biggest thing I gained for sure was like I gotta watch the pre-market. Gotta wake up a little earlier, and get like my pre-market footing, because that will give me confidence, right? When I see the 2200 crossover.
Yeah,
Yeah.
definitely, definitely. Because like if you look at I didn't have I don't know why my levels aren't showing up here, but there's supposed to be a level right in here. I think it was 160 or 161. I'll have to go back and check it. I don't know why. I must have accidentally deleted them. But same thing with MSTR, and I didn't catch this one today, and this one was just fantastic. One, you could have taken it here, held it because you didn't get two closes, stay in this thing. You could scale out at the yellow LRC. I did have the 163.84. I'm not sure what that was representing, but it was something, of course. Um, it may be something from a long time ago, but uh, rinse and repeat. If you watch how this trades, it does the same thing over and over. And this was your big catalyst, right? This was the big move. When you hit this yellow and then you launch off of it right here, that's a big you get in, and then you can see what happens after that. It's incredible. You don't even have to you could exit here because of this possible pullback, but then you're able to get right back in if you want to. At this point, you're probably up quite a bit and you're ready to take the day off. Depending on how many you get in. Now, if you're just getting one and you're up 70, $80 or something like that, and you want to try to do more, then I get that. It just depends on the amount that you're risking or leveraging.
Do you scale out on like pre-market highs or lows, or you kind of just disregard?
Um,
Uh,
I don't really. I watch price action. Like I don't hold them to as high of regard as my LRCs. I do like I'll pay attention to them, and sometimes it's bit me, because like it'll get up to pre-market high or previous, and the previous day high and lows. I do tend to pay more attention to those. Pre-market high, I'm kind of looking for that to be a breakout, like move out of the like an ORB breakout out of that level. Um, However, I will. I'll just pay attention to price action. You know, if I get like if it comes up to it, if I'm in calls and it comes up to pre-market high and I get like two red candles, yeah, absolutely, I'm getting out. I'll wait and see if it gets above and then get back in. Um, doesn't hurt. The only thing that you're losing is commission costs, right, per trade. So
Yeah.
doing the entries and the exits, you know the depending on how you want to trade it, it can add up with your commission costs can add up. Um, but uh, the really the best way to trade this strategy is the two close below the green, below the 20 EMA like this here. If you got in here, you stay in it no matter what until you get two closes below the 20 EMA, then you exit. You get back above, you re-enter. You do it all over again. You wait till you get two consecutive red, and that's where how far you would have got on this one. Unless, of course, you're getting this and you're that high and you're like, yeah, I'm going to just take my profit and run. You know, those are decisions you have to make as a trader. But um, if you're looking to follow a rule set, that's the one that I recommend because it just works every single day like clockwork. Can you get into a choppy area where that pullback takes away the profit you made? Absolutely. But you have to be, it's either you're willing to stick to a specific set of rules and be disciplined with it, or well, for instance, I'll deviate from it myself um, by dropping out at the second red because I don't want to take that loss. And then for instance in this situation, which I think you and I have already talked about this before. So say I get out at this red here. Well, I probably wouldn't have because that red closed above this one. So my risk is nil, right? Why would I exit on this close? I would wait and see if it starts to move below again, and if it did come down here red below this candle, then I would get out. But since this one stayed like right here, you kind of keep, gauge it and see if you want to risk another drop lower or if you're going to go ahead and get out. Sometimes when you have these reds stop next to this one, you start out green the whole way. So it kind of helps you to stay in. But this one could have went down, and like I've said before, if you do just get out on this one, let's just say you're like, it's two red closes, I'm out. That's perfectly fine because just think the next candle could have came down, come down, come down, come down. We don't know truly where it's going to go and how it's going to react. So that could have been a hero move. Like you got all this, you got out right there. That could have been the absolute almost perfect exit if this continued down. And I say if, right? Because again, we never know what this is going to do. You just have to watch and see and watch price action. And since it didn't come back below, you could have held and then stayed in this trade the whole way. You get another two reds. Looks like it's pulling back. This one does close below that one, and if you get out, then you got this other leg up, and you got out right here. You could then re-enter again. Again, this is getting like crazy how you can just keep entering and exiting.
Yeah.
Now, granted, you could also change up your strategy or your rule set. If you don't like the 20, do a 14 or do a 9. I know some people trade the 9. Like you can do let's just do a 15 and see where that puts us. When you get a cross below the two crosses below the a 15. So you can change and make that whatever you feel your risk is. What I did by when I back tested this strategy, I tried to gain the maximum amount of the trend or the move as possible. And the 20 EMA helped me to achieve that. And look at how good this looks, right? If you go with the 11, this is pretty solid. Downside to the 11, let's find another maybe SPY today. I don't know. If you get a little bit choppy or you have, or if you have a stock that kind of has some ebbs and flows in its move, it's going to stop you out a lot. because you know it's going to go over that 11 more to, you know, more than where did, here's yep, here's today's. So you can see like the 11, you're boom, you're all the way through it here, you're through it here, you're through it a lot here, a lot here. So you have to, that, again, that's something you have to be, you know, that has to be a decision you make, how much you're willing to risk to get the bigger gain. Um, and there is no crystal ball. There is no holy grail. It's something you just have to decide how you want to trade yourself. You can use the, I think I showed you the ATR. I have an ATR. You can, there's so many of them out there you can use.
Oh
Um,
yeah, you should.
so this is the ATR. It's purple. And now I made this as a strategy. So it allows you to get in and out. So what I usually do if I wanted to, or what I used to do is I would just use one of them. It doesn't matter which one, purple, yellow. And then you just set this to, let's say you're willing to have a 2 ATR, or you set it to 2, and then you don't get out at all until you close below, which is right here, the 2 ATR. And depending on the stock you're trading, so some you may want a 1.5, that gets you even more. Some you may want a 3, just depends on what you're trading. Um, But I mean, this is a really good method. There's a lot of people that trade the ATR as their trailing stop, just to give them an exit. And if you follow the rule and don't get out until it closes below it, you can see this would have got you quite a move. You know, again, this is all hindsight because this one could have came through right here, or could have came down through right here. We don't know, but at least you would have got to that point. And no matter what strategy you're using, if it turns around right here, it's going to turn around on any strategy or any stop or anything you're using. So the goal is to have, most important goal, in my opinion, is risk management. 100%. I mean, that's it. Know what your risk is, know when you're getting in, know when you're going to get out. Like if it gets to a point, just take your loss and be okay with that. Feel good, not about the loss, but feel good about the discipline and following your rule set. And I promise you, if you can get yourself to be, that's the hardest thing for all traders. I think, now this is just me talking. This is my opinion. I think the hardest thing, because I went through it too, is getting yourself to a point where you don't YOLO, you don't just, your emotions don't take over and try to get you in, and then your emotions take you out because you're like, oh man, I'm in a loss. But you have to be willing to be at a loss to be able to get your gains. That's just the way trading is. You're not, I mean, one good thing about this strategy, and I have to say it has hit part of what's helped me, it's helped me a lot in my trading, but it's actually helped me in way more than I ever thought it would, because it's kind of opened my eyes. But it it helps me to know when to get in, and it gives me really good risk to reward. So I think that's the beauty of it, is when I lose, you can see I had losses today. Now my Baba was not on me, everyone. I shouldn't have had that loss. Baba, I should have had about a $400 to $600 profit today, but it wouldn't sell, and I don't know why. Right here's where I tried to sell Baba. So I got in heavy. I had, I got in here, or no, I think, oh, I can't remember where I got in. Am I on the right day? Yeah, I'm on the right day. Oof, that's an ugly price action. It looked better when I was trading it. That's the one thing. Um, where did I get in on this? Did I trade up to? Oh yeah, so I entered this early in I was trying, this is me again, this is, I guess, when you lose, you lose, even though I shouldn't have lost. I got in right here on this push up off the yellow, And then I added in heavy here on this candle as well. I was looking for Baba to just scream because of the news that came out of China, and they were talking about how their stocks were going to just go through the roof. So I was like, okay, I'm going to hop in this early. So this was me trading off of news. I didn't really trade the plan because the trading the plan would have been waiting for a close here and then getting in. Um, so poor choice on my part for getting in, but I was up like $400 on this candle. I couldn't get out. I even tried to put stop limits way down, around 100. I couldn't even get out there. It wouldn't even let me out. I hit market. It just kept giving me like an error, a rejection, and I couldn't figure out why it was doing it. Um, and then when I finally got out, it was like down here, and I ended up losing like 360, or no, I think it was all the way like right here. Finally, yeah, it was definitely on this candle because I remember I was frustrated because after I got out, it went right back up. So I was like, of course. So I was down like 368, and then I got back up again, and I was like, you know what? It got back up again above the red. I'm going to give this a go. Went back down, I lost again. I got back in again, I lost again. I was like, okay, I'm done. I'm not messing with it anymore. It isn't going to go. So I was expecting a move up, and we got to move all the way down today. It finally got back to almost the open, but so this was a very poor example of what to do as a trader. Um, and I know this. Sometimes I'll YOLO things because I'm really wanting to catch, a news move or something. And sometimes I get lucky and I do. But the bad thing about that is it can build bad habits, guys. So everybody that does that and you get a win, just remember, man, it plays on your emotions and you'll build a bad habit, and the next time something like that comes in, you do it again because made profit on the last one. Problem with that is now you're setting yourself up to fail more and more because you're going to fail probably more times than not off of YOLO. I mean, that's just the way it is. You have to really trade off of levels and have really good confirmations, which I did not have. And so I'm really talking more to myself about my dumb trade today. So yeah, don't do that, guys. That's ugly. That's just dumb to even get in that. And wow, did it? It's funny when you're in the middle of trades and you're watching it happen live, it sure as heck doesn't look as bad as when you go back and look at it. I wish you could kind of see how stocks really look or the price action looks when you're in the middle of the trade. Yeah, I mean that is why I do like having uh, the 5 minute and the 15 minute showing so that I can actually get an idea of the bigger picture of the stock looks. Um, yeah, and one of the things now, the other part that made me want to get back in here is we came down and hit this. We finally closed this big gap. This was the pre-market gap, and it came all the way down. When it came here and started moving up, I thought, oh, okay, this thing's going to just continue and go. It's not going to fill the gap. But look what it did. It came down and filled the gap. So I traded the wrong way. I should have traded for the gap fill, not the other way around. But anyway, that's how the cookie crumbled with that one. Anyone else have any questions? Any stocks you want me to look at, review, uh, anything? Labs, Sal, any questions? Sheep, hey, bud. I didn't see you sneak in. How you doing today, man? We missed you. We missed you. You've been you've been you had to go to work, didn't you? Is Oh, okay. Now you're having to go to your office, right?
200 EMA cross up.
Yeah, I bet. Your job your job at the office has to be very difficult. That's why with my, not to get too sidetracked here, guys, but with me and my business, I own, for years I always did the architectural drawings and I managed all the designs and the builds and the fabrication and all of that stuff with my business. And I used to have my office at our main manufacturing plant, our office, right? And there, I couldn't even get my job done. I was having to, well, every day I would get home from work, I would actually then have to do all my actual architectural drawings, and I was working till 2 and 3 in the morning, and then getting up and doing it again. And finally, I was like, because what would happen is while I was there, everybody was in my office constantly asking me questions. So I was basically just like holding everybody's hand, and I was like, I've got to get away from this, otherwise I'm never gonna get the job done, right? So I finally moved my draw. That's why I can trade during the day, and then I do my architectural drawings after I've profited enough and can move on. But um,
What's your business, if you mind me asking?
oh,
You don't have to say.
oh no, I don't mind. I own an ornamental metal company. It's
Oh,
Southeastern Ornamental Iron Company. We build railings, gates, fencing, balconies. Yeah, yeah,
what got you into that business? What were you just
yeah.
working?
Family owned. My dad was a welder, and he worked at like the our local shipyard, and then he, to make more money on the side, when I was a kid, we had a little garage at the back of our house, and so yeah, yeah. So that was my life. See, my life wasn't. I mean, my parents wanted me to do well in school, which I did well in school, but they didn't really care. It was more about work. So I'd come home, and first thing I had to do is go out to the shop and drill and grind, and yeah, yeah. So I learned to weld at a very very young age, and basically more like blacksmithing work. So it's pretty awesome. I wouldn't change anything though. I had a great life. Or have a great life.
Side.
So yeah, yeah, yeah. But I did work my butt off. I have to say, there were some funny times when my friends would come and have stayovers or sleepovers, and I'd get up down. My dad would come and get up 5 in the morning. I'd go out working. My friends would be like sleeping until 1, and then want to go surfing or something the next day. I'm like, oh my gosh. But anyhow, yeah, you missed some good moves today, or were you able to trade? Uh, oh, oh my gosh, I missed most of yesterday. I don't know if you saw my video. I don't know. I must have just been in a funk. But I mean, I got into a couple trades, but I literally missed. Oh no, no, no. The new version came out after that. I did that last night. We were in a live session, and Nomac asked me if I could add more levels to it, and I was like, yeah, sure. I can have Chat GPT do it, and I did it while we were talking. And so I made the four, and actually you're gonna like it, I think. It gives us some really good ranges to trade to, and they're definitely working out. But yeah, like I don't even know why I missed this. Like here's a good example of your question earlier, Labs, like how to get in best entry. And Sheep may be able to help in this regard, because he's one of the gentlemen I was talking about that is a part of the community that this actually helps him with his entries, where that was kind of like his struggle, I think. I don't want to speak for you, but I think that's what you had mentioned. Um, the execution is really simple with this. I think that's probably the best thing that I've gained out of it as well. And I think the biggest thing is everybody that's trading, they just have to understand that you have to be willing to get out of a trade, because it doesn't matter what you have, what you see, what MAs are telling you what. Price can do what price wants to do. And market makers can do what they want to do at that moment that you think it's going to do something else. So you're always, you have to get in at what I'm going to say your highest probability areas. And if it goes against you, just be ready to get out. And then take your small loss, take your paper cut, is what I call them, and then get back into the next, really good trade. But yeah, could you look at this? I mean, this right here is all day. So you see, we already know that 573 was a significant level, right? And this is what I missed. This was your entry right there. You push off hard off of, not only this was the LRC, but this was the long LRC right on it. Comes straight through. You don't even get any pullback. Granted, I wasn't watching news also either, and other people were talking. They were watching. I guess the bombs were, or the strikes were happening, in Israel or whatever. I didn't even know all that was happening, or that may have helped give me a heads up to go, oh wow, because anytime you're having like war happening, you typically go down in the market, um, especially when it makes news. But man, look at that. I know that probably upsets you right there, sheep. But whoo boy, oh man, I look back at that and I was like, what was I doing? Why didn't I? I mean, I did okay, but geez, that would have been about a $10,000 day if I would have stayed it. But you know me, I would have got out right here. I didn't let it get me twice though, sheep. I don't know if you're watching the screen, but look at this is what I got today, and I got 1,000 out of it. I got this move here closed. I got in there and I traded all the way to this one and got out. Yep, got all the way. Went to this is one of the I think that's number 5. Well, heck, I can count 1, 2, 3. That's number 4. That's number 4 on the new LRC. Yep, in reverse all the way, like massive. I didn't get in this because honestly, this was this caught me off guard. We were talking about it. I was like, you could try. It's rejected. Came almost down to 565, but I was concerned that it was going to get up here and then just because it was so weak. I really didn't expect that, but that's trading, right? You never know how it's going to work. You could hop in and I think Knight actually got in a little bit. You know how he is. He scalps quick. He gets in, he gets out. But he don't play around. Like I'm like, you still ain't gonna see. He's like, no, I was out 10 minutes ago. He took my profit and ran. But
So, quick question on this one.
sure.
So wicks on the yellow, right? And so it's bought back up.
Yep.
And then I'm seeing the pre-market. It has like wicked on this red like all day.
Yeah.
So is your conviction just like what gave you this like added conviction to say, oh, it's going down?
I think a few things. There was quite a bit. I think also the rest of the market at the same time, right? Like there was a lot of things happening all at the same time, which I'm watching all of it, right? However, this it also went through a major long LRC channel here. It did here too, but it regained it. This was a pretty solid hold. It did close below the red, which tends to make a difference for me. And then basically what I do in this case, there's a lot of things that happen. Again, you get through the 20 of the 200, they're above. So I feel like, okay, I'm on the downside of the trend, um, of the move. Can this go right back up through? Sure. That's just going to be the risk I'm willing to take. And that's that. And this is one of those areas that you have to be willing to risk it to get the biscuit, right? But the problem with this for people that have small accounts or they're new, um, if this does go back up, it's a huge risk because that's a big candle, right? Right. So the way you manage that, in my opinion, if you're like, okay, I'm trusting the strategy, I'm trusting the move, and also, oh, let me show you one other thing that happened. See where these stopped over here? It broke structure. If you hear me, I talk about that all the time. If I break structure to my left, I'm also, that gives me more of a conviction that we're going to get a follow through. So that's just one of the other things. I'm trying to watch everything. I know it sounds crazy, but I do. I literally am scanning, looking up at the upper charts, and just to kind of make sure that it makes sense. Does it always? No, it goes against me sometimes. But um, the one way you can trade these type of trades um, is, and I don't want to forget, I want to also talk about follow through, right? Um, but one way to trade this trade right here is the get in with just one. If you're like, okay, I like this, but I'm really concerned about my risk, and I'm saying one, I don't know, depending on what you're trading. If it's SPY and you're getting in one at the money, you're very minimal, right? You're probably going to be what, $100 max loss, or maybe 150 max loss, depends on what it is that day, um, at the money. So if you're doing SPY, if you're doing SPX, that would be more difficult. I wouldn't suggest getting into an SPX unless you're willing to take the loss. Okay. Um, and as you trade and build your account, you can start risking more, right? Leverage a little bit more, and that can hurt you. So you have to be really careful with that, of course, right? That can be one of the. I've seen people actually blow up accounts after they built them because they then got too, and that's my concern with myself. I started building my account. I've been building it now for a good bit, and I started increasing my amount, my risk, and my leverage. Problem with that is you can reduce your gains really quick. So it's that fine line, but once you get to a point of where you feel really confident with your trading strategy, then I think that's when you make that decision and get moved to that. I'll just call it the next level. But the best way to do if you're not 100% confident, just get in with one. If you see this red come up and then you get follow through, then add here. Then you're like, okay, this is moving down. And then you get another pullback to this red and then this selling pressure, add again. But start small. That way, guess what? If you start here and this goes up, then when you're out, you're not taking a big loss, but at least you're in early. And in that case, if you get a big candle, there's other ways I've seen. I think I was watching Oliver Velez's um, videos, and he was talking about like candles like this. He gets in, boom, I think is how he says it. I he gets in like right away, and he's willing to just hop in early because he wants to be in as soon as he can be on these huge candles. Because I think once you cross through the 20 and the 200 like this with a big candle, it's like an 87% chance of continuation. Yeah, 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 yeah. So there's some statistics behind it. I may be a little high. You guys can correct me if I'm wrong. Hey, little bit. How you doing? If you have any questions, just shoot them out there. So the other thing I want to talk about follow through, and this is kind of important. Something I think I've just picked up over the years, and I've recognized. I don't know statistically if there's percentages to it or whatever, but if you get a big candle like this, and then your next candle just kind of hovers and stops right here, that's if you don't get follow through, you be prepared to get out. Like if it starts going up, just go ahead and get out, and then you can re-enter. And the reason I say that is just protect your capital, because a lot of times you'll get. Let me see if okay. So you get this huge green candle, no follow through. Look what happens. Bam. Um, now these are hard. This isn't the same because that's already a continuation. That's three. But if you go back, you can do that. You're on your own time. Just go and look at charts and look at candles that go up, and if there's no follow through, so a lot of times they won't continue. They'll just keep going. This one, proves me wrong. It comes down, wicks back up off the 20. But I also have a lot of things here. Um, Look what happened on my long LRC. This is my long LRC line. Long LRC, long LRC, long LRC, long LRC, long LRC. That's how important those things are, man. They will, if the rest of this isn't here, which happens quite a bit. Like I'm outside of the range, I'm hitting my long LRCs, and it gives me absolute areas to target as well. So
Gotcha.
um,
Okay. Yeah. That's
I hope hopefully that's explaining what you're asking. Um,
yeah.
it's
Yeah.
more difficult, I think, than everybody really thinks. People just want to get like an indicator that tells them what to do. And there's just not really that out there. There's some that you can get in, but they're not going to be consistent because they're going to tell you to get in when you're right at a level. And that makes no sense. Why would you trade into a level? Can it work? Sure. Will it be less successful or more of a fail most of the time? I believe 100%. Yes. If you're trading into a big level, you're more likely to get rejected and get take a loss than you are to get through it. You need to have a break and a retest of that level, in my opinion. But that's just me.
No. Yeah. This is definitely helpful. It's uh. Yeah. I know trading is like a lot. Like yeah, a lot of it is discretionary, right? So you can't be prescriptive about it. Like A plus B equals C, right?
Right.
It's like, but that helps to know, like, okay, yeah, you're coming strong through like 20 and 200, like that alone risk and reward.
Yeah. And the best thing to do maybe is just to get not even worry about the LRC levels, right? For now, just get a 2 minute chart, the 20 and the 200, and just go study all the actions around them. Because you can literally almost just trade that alone. The LRCs give me just a much better, uh, I think, confidence or confirmation of a move. And then if I start seeing it, like for instance, this pullback right here, and I see this wick up, then I see this one stop on it, this one stop. That tells me that this is an absolute, get back in here and then and hold. Um, but for me, my goal is to catch what I call like right here each day and be done, like one and done every day. I would love to be able to get in heavy enough that I didn't do that today, and I should have. I got in only 4 contracts. I scaled out at the yellow. I didn't add here like I should have. I should have added right there again. Um, and I ended up making like $1,000 on this trade. Uh, I really should have bought with this move. I probably should have went in 8 to 10, and then I would have been up, that much more and had a massive profit today. Um, but that is what it is. For me, it was kind of hard after yesterday's. I think you guys have heard me several times. Like when we have those crazy days, like crazy news days, I'm usually very, very, very protective the next day. And I've missed a lot of really good moves and good trades the next day because I was concerned about what the market was actually going to do. But I'm okay with that. I really am. It doesn't suck to miss them, sure. But I think at the end of the day, it's going to reward me far more than it hurts me. Just being, more protective, going lighter, um, just reduce my risk because I'm not really sure if we're going to get into a really choppy, garbage market
Yeah.
or price action.
Well, yeah, yeah. Thanks for answering my question.
Oh yeah, no problem.
For all the questions.
Oh no, no, no. That's why we're doing this. Yeah, don't be sorry, man. That's the whole point. Anyone else? Yeah, sure. I think you put that in the learning channel, didn't you? Let me see if I can locate it. Is this the spreadsheet or the image? This is an outline, right? Okay. Yeah. Oh, for sure. Oh, for sure. 100%. If you can start trading, what's really hard is if you are at a point, and this isn't knocking anyone, this is just facts. If you're at a point where your account's small enough, and there's nothing wrong with that, but if your account's small enough that you can't really afford to do more than one, it makes it really difficult. So then you have to be even more protective and more um, patient, right? You want to get the good gains and walk away and do that day in and day out until you build it to the point where you're going to then be able, like Sheep was just saying, scale up. Now you can do two, but if you're able to do, it's so much better when you can do multiples because then you can scale out and lock profit away, and you'll be surprised how much better of a trader that will make you just in its own. Because once you have profit, then you're not so concerned about that pullback and that possible, you know, risk that you're going you know it does suck sometimes because I've done that and I get a pullback all the way to where I end up with a small loss when I could have had like a $300 or $400 gain. But that's part of trading. You have to be able to, we don't have to. You could have a goal, and like if you get to, above 200 on each trade, you're taking it and running, and that's perfectly fine too. Everybody can have, a different mindset and a goal. For me, I do say like if I'm up 1,000 on the day, I'll be happy and I move on. Um, I don't like over trading, but if I can get up, if I can get into a trade and I'm up 1,000, but I'm able to scale out and then let it keep going. Of course, I want to try to get the entirety of that trend or that move. Um, that's tough to do
Look
sometimes.
for
There's,
upside.
I'm not going to say it is. I think my biggest struggle has been following my 20 EMA rule that we went over earlier. It's really hard to do when you start getting those pullbacks and you're up a good amount of profit and then you see your profit start coming back down and you're like, oh man, if I had just locked it in. But sometimes being patient pays off like big time if you hold to the other side. But once again, that just depends on your what you're willing to risk. And those are the goals that you have to set, for yourself. And sometimes I would have to say, I think there's been many times that I think if I had started years ago, that if I got to X amount of money and stopped, I would have so much more money right now, and that's no lie. Even with since starting this channel and trading this strategy, I overtrade. Like I keep trading. I'm like, why am I still trading, man? I'm up this amount, and then I end up losing like 200 or 300. I'm like, it's not really smart to do that, and that's why I try to get out. Once I get up, and I just try to stop trading. Um, as soon as because I just know my nature and human nature is to you know get back in and try to get more.
Yeah, it's never enough.
Right, right. You're like, what? Yeah. I like, oh, man, I just put 2,000 away. I could do that again right now, and now you just lost 500. So now you're at 1,500. You're like, oh well, I'm at 1,500. I'm doing good today. I'll try another trade. Now you're at 1,200. You know what I mean? So that is the cycle that I've seen. Not just me, but a lot of traders go through. And so when I say I'm done, I hope I try to mean it. I know that I don't always. And I fuss at myself during the day. I'm like, I should not be trading this. But um,
Yeah,
anyhow.
that's helpful. I've only been trading one contract, and I've had like tight stops. I'm being conservative about it, but still I get it.
And that's excellent. Just once you can trade two, and you may want to try this if you're trading one, and I don't know like what um if you want to say, you don't have to, but what amount of the one are you trading? Are you just doing it more like testing, learning, um small amounts?
Yeah. Like maybe like a specific ticker,
Or no, just an example of the cost of the contract.
oh, okay, yeah. Like I'll do like one spot.
Okay.
Look for
Or
upside.
sometimes I'll do like
So possibly a $200 trade.
yeah,
Okay,
yeah.
okay. Okay, so one thing you may want to try, and this is part of what we were looking at, and this is totally up to you, but you can also do this mentally and not actually take the trade. You can just do it using the bid and bid price, the buy bid and sell bid and buy ask, sell ask, to find out what your worst case scenarios are. And this is what I tell everyone to do, because paper trading's garbage. That gives you false information. You can I can make 10 grand easy paper trading, and it's just easy like every day. I can I yeah I get into yeah I get into live, and it's like yeah, no, not so much. So what you can try though is during the day, instead of actually taking a trade, just mentally go write down what you would have got on, at that moment, what the price, where your entry price would have been. And instead of taking that $2 contract, take two $1 contracts out of the money. That way you're spending the same risk, $200, and just pay attention to that and go, okay, this is where I would have scaled out with one, locked in this much profit, and then take profit at at your target level. And you may be able to see that taking two, two that is a little out of the money, that equals the same as what you would have bought by buying one in the or at the money, or close to at the money, assuming that you're buying them at the money. Um, but you see what I'm saying though. You could
yeah, yeah.
that that
Definitely.
that gives you the ability to have some that you can scale out and lock in profit instead of having just one, right? Because the sucky part about one is you're like, oh man, I want to take this, but I don't want to miss all of the rest of the move either. But then if it pulls back, now you didn't take anything at the scale out level, and now you're down. So it's pretty crappy when you're using just one. It's really tough. So um, once you get your account built, and I believe you definitely will. You just have to, you know be disciplined, manage your risk. How you doing, Troy? What's up, Wall Street? I haven't seen you in a while.
Hey, long time no see.
Hey. Who's this I May Pros in the YouTube? Oh, wait a minute. That had to be Jermaine. That is the Yuka. Ah, jeez. So, anyone have any questions, or any trades you guys want to review that you may have taken today or seen come up, thought about taking? Before you guys see my wife come down here and grab me by the ear and snatch me out of my chair. Yeah.
So I know your grid is not no 4x4. Do you use anything like trade ideas to find things that are moving on the day, or just like the mags?
I pretty much these are the main ones that I watch for my I will call this my main 12 that I watch on this grid, and then my alternate grid, I'll pull that up also. My alternate is, excuse me, this is the one I vary. So sometimes I like if I'm watching, I had CrowdStrike in it today, SMH, MSTR. Look at that move, guys, off that yellow. I'm just telling you right there that is a that that's why I have the grids, but I didn't trade it. So um, that is a, I didn't know what they did, but Knight, I think Knight and someone else was talking about it today. They just buy crypto. They buy Bitcoin, I think. Oh, that's not it. What is it then? They were saying that today. I don't know what it is, but oh, you do. Okay. Oh, okay. Okay. So they were right in the crypto part, but not the actual company function. Gotcha, gotcha. Okay, cool. Thanks for that. Yeah, they've had some really good moves lately. I missed this the other day. I got into a great MSTR move, man. Oh, it was good. It's good. Yeah, it moves. Like Baba sucked. Baba was rough. And there was a lot of people trying to buy that, but Baba's kind of always been uh janky, if that's a word. Yeah. So, Sal, basically, I just use the grids. The only thing that I have used in the past was Finviz to do a the screeners, and that was really trying to see if I could pinpoint stocks that may be moving or maybe in a larger time frame pullback that are really, coming to levels and ready to move. And I did find some. I really just followed some YouTube's strategies and setups that worked out pretty well. They did find some good ones, but I don't use it to trade this strategy. I really just try to find really good moving stocks to trade intraday. I think for me, if I'm going to go outside of the big boys, so to speak, and that's really going to have to be a swing trade because you just don't move well enough to sit and watch. You're up 300, down 800, up a 500, down. You know what I mean? When you get into those type of stocks that are just low volume, it's tough, man. I don't like it. Maybe it's just me, but I like to have stocks that move. Yeah. Um, so that's really how I do it. But I have used FinViz. I have several presets in FinViz for like swing trades and trying to look like momentum movers and all these different things that I've set up over the years. But I don't really I don't use them for anything like trading intraday for the most part. Really, it's just based off of levels and the LRC, and this is the strategy for me. Wall Street, you been trading any using this strategy or using anything else?
Just watching you strategy. I'm more into I'm a seller. You know,
Oh, okay. Does anyone else have any questions?
Once you get past the yellow line, top line, parabolic, line off.
Yeah. Sometimes the yellow is just money. And it has been here in the. Unfortunately, I can't go back and look, but I think for the last week or about a week and a half, we've been able to, like, if we see a stock, for instance, get up out of, above the yellow, and then come back and retest it, just like, well, almost exactly what MSTR did. Here lately, it has just been, man, just get in. If it goes against you, you're right at your stop out, right? But this is exactly what we've been seeing lately. Like we get a break above, a retest, enter right here, and just off to the races. And we've had that just a ton, and it's happened several times during the day too with some stocks. Like they'll come up, hit up here, come down, reject, hit it, go up again, kind of cut, come down, hit it, and go again. Um, so it's really wild how much it's respected. I've been trading this strategy for quite some time now, and it's still just it does not it amazes me every single day still.
It might be because once you're like two standard deviations away, like the yellow's two standard deviations away.
That is correct.
I
Yeah.
guess, yeah, once you're that far away, there's something probably like behind the stock, as in like institutional involvement or something like that.
Oh, for sure,
Like, okay,
for sure.
that's probably why like once it breaks those yellows, it's off to the races.
It has to be. I mean, it's just too good. There's been too many days, too many times that it's just spot on too. Um, so yeah, the institutional traders, the market makers, whatever their algos are, there has to be something to it. Well, let me look at AMD today was pretty interesting. We were talking about this one earlier, but look how AMD just decided the yellow and the red was its end of the day. This I did not catch today, but man, that would have been a great trade. This is the outline of this, what that trade should have, how it should have been traded or could have been traded from start to finish. I'll put this in the Discord. I know Labs, you wanted it. It is in the use think script form as well. I put it in there earlier.
Oh, okay, yeah. I could just go to the forum, but
Oh, I'll
uh,
put it in our Discord.
okay, cool. Yeah, I was reading the diagrams a lot before I joined, so
Oh,
I didn't see
from
that.
that from that forum. Yeah,
Yeah, yeah.
and it's all the same thing though.
They're out.
It really is though. It's all the same thing. So it's the same every time I go through and do and lay it out, it's the exact same process every time. Um, the only thing that every trader has to be concerned with is their own risk management, right? And their own how much they're going to leverage, how much they're willing to risk in that trade, um, with all the the parameters that we've discussed. Um, if you get a huge candle way above the level, do you want to get in that? Because if it goes against you and it goes back, now your risk is way greater. Um, are you willing to miss out on really good moves because of the risk? If that's the case, then yeah, just miss the move and wait for another one to set up. Just be patient. Yeah.
I gotta hop off, but yeah, thanks a lot for doing this.
Oh, you're
See you
very
later.
welcome, man. Very welcome. Awesome. Well, guys, not awesome that you're leaving, sheep. Didn't mean it that way. Right? See you on Friday, man. All right. Good to see you again, man. Bye. All right, guys. Well, I think I'll wrap it up as well. Thanks for coming by. Oh, yeah, yeah. Go ahead, Troy. Yep. Oh, yeah, absolutely. Yeah, no problem. Here it is. High-low fib. Well, you have to set the, which I'm sure you know. Excuse me. You have to set the um your let me put this in here. There you go. You have to set your look back, right? So I'll add it to this one and we'll take a look at it. The problem is it's only going to work out. Did I add it? I did not add it. Yeah, correct. You have to set your length. Yeah, you have to set your length because if you're trading a 2 minute, you're going to want to pick up a decent distance back. So I think for me, it just depends on how tight you want to this one I had right 6 bars and left 6 bars. So you could go right 11, 11, 22 minutes, right? Um, and then it changes. So now your highs and lows are only in these areas and not in between, which is kind of nice. You don't really want that one, I wouldn't think, but um, if you're using this on a 5 minute, it gets even better, so to speak. But it only gives you your fibs at your last one, though, right? So it's going to use this one and this one and put your fibs here. And now the fibs, you can change those how you want. I went in and made my fibs the um, I'll zoom in close. The orange is 50, yellow is 61.8, and the green is the 38.2. And this may be my 71. I think this is my 100, and this is the 0 and 100. The tops and the bottom of the retracement. But you can go now that unfortunately when this was made, it didn't give a yeah. You have to go into the study though if you want to adjust it. You have to go in and write the ones that you want to show. I just went in and put them in manually. Yeah. Oh, for sure.